Ever wondered why so many people are skeptical about Forex trading? Could it be due to the myriad misconceptions swirling around this field? Well, today we're here to debunk 10 of the most common Forex trading myths. First up, Forex is a quick way to get rich. A big misconception. While some traders do make substantial profits, they are the exception rather than the rule. The reality is that trading requires patience, discipline, and a well-thought-out strategy. The second myth we often hear is, the more complex the strategy, the better. This is a common misconception that can lead to unnecessary complications. Often, keeping it simple is the best approach. Third on the list, you need a lot of money to start trading. This is another myth that intimidates many potential traders. The truth is, you can start trading with a relatively small amount of capital. Fourth, Forex trading is a full-time job. While some people do trade full-time, it's not a requirement. Many successful traders balance trading with other commitments, such as a day job or family responsibilities. Moving on to the fifth point, emotions don't affect trading decisions. This is not true. Emotions can significantly impact trading decisions, and often not in a good way. It's essential to keep emotions in check when trading. And finally, number 6, successful traders win all the time. This is a fallacy. Even the most successful traders have losing trades. What separates them from the rest is how they manage those losses. So there you have it, 6 common misconceptions about Forex trading. By dispelling these myths, the hope is to provide a more realistic view of what Forex trading entails. Knowledge is power, and understanding these misconceptions can help pave the way for more informed trading decisions. Happy trading!